Subscribe to my channel Report Stock.
Every digital product you use, think about it. The apps on your phone, the websites you browse, they all start somewhere.
Right. Behind the scenes.
Exactly.
Yeah.
Usually with design, collaboration,
Yeah.
and a platform bringing it all together.
And that's where Figma comes in. They've been, well, making some pretty big waves.
Definitely. So today we're doing a deep dive into Figma's latest results, Q2 2025 financials, plus some big product news.
Yeah.
Our mission here is to unpack all this, understand the numbers, sure, but also the strategy behind them. What are they building? Where are they going?
And what does it mean for, the future of how digital products get made and for anyone just watching the tech landscape, really?
Okay, let's unpack this then.
Yeah.
Figma just dropped their Q2 2025 results, and they're showing some really interesting moves beyond just the financial sheets.
What's fascinating here is not just the strong numbers themselves, but how they seem to reflect this much broader, pretty ambitious strategy.
For the entire design and product development lifecycle, right?
Exactly. It's not just tweaking things. It feels like real expansion and integration.
Okay, let's get into the specifics. The big picture first, those financials. Figma's Q2 revenue hit $249.6 million. That's 31% higher than the same time last year.
Wow, 41%. That's impressive growth year over year.
Yeah, CEO Dylan Field called it another strong quarter, record revenue.
Mm.
The CFO, Pravir Mawani, said best-in-class revenue growth. 41% growth at their scale.
It's significant. It really signals they're not just keeping pace, they're actively capturing more market share or maybe even expanding the market itself. That kind of acceleration suggests they're really hitting the mark with users.
And here's where it gets, well, really interesting for me.
Yeah.
The profitability turnaround.
Ah, yes.
In Q2 this year, GAAP operating income was $2.1 million. So a 1% operating margin, basically breaking even on operations.
Okay.
But compare that to Q2 2024. They had a GAAP operating loss of $894.2 million, a negative 505% operating margin.
That is quite the swing. Almost $1 billion loss to profitability in 12 months.
It's a massive move. What does that kind of shift tell you about the core health of the business?
Well, it's extraordinary. It points towards some fundamental improvements in how they operate relative to revenue. It suggests they've likely hit some serious economies of scale,
Right.
maybe optimized their infrastructure costs, streamlined operations, but crucially, without stifling that top-line growth we just talked about.
So smarter scaling.
Exactly. It's not just cost cutting. It often means they're getting more efficient at monetizing their user base, perhaps leveraging their community, making smart tech investments. It suggests their underlying unit economics are maturing very quickly.
Makes sense.
Plus, they reported positive operating cash flow of $62.5 million. That confirms the core business is actually generating cash now, not just looking profitable on paper.
So it's not just growth. It feels more like sustainable growth now.
Precisely.
And a big part of that sustainability usually comes down to keeping your customers happy and getting them to use more, right?
Absolutely. Customer retention and expansion are key.
On that front, Figma's net dollar retention rate, or NDR, for customers spending over $10 fee a year was 129%.
Okay, 129%. That's a very strong number.
Yeah, maybe let's clarify that for listeners.
Yeah.
129% NDR means that, on average, their existing key customers from last year are spending 29% more with Figma this year.
Which is incredibly powerful. It shows Figma isn't just adding new logos, they're becoming deeply embedded in how their customers work.
Right.
This isn't just about selling more seats. It strongly suggests customers are adopting more of Figma's products, maybe upgrading tiers, using it across more teams.
That stickiness factor.
Exactly. It's often more efficient and strategically valuable than just chasing new customers all the time. It shows the platform provides real, growing value.
And they have a lot of these key customers. Over 11,900 paying more than $10 in AR. And over 1,100 those paying more than $100.
So a solid base of high-value clients.
Definitely. And add to that, they're sitting on $1.6 billion in cash, equivalents, and marketable securities. Financially, they look, well, pretty solid.
Right.
Very strong foundation, yeah.
But that financial health seems to be fueling some big product ambitions. They actually said they've doubled their product offering.
Doubled. That's quite a claim.
It is. New design features, a lot of AI stuff. What's the strategy behind such an aggressive expansion like that?
I think it's a very clear signal. Figma's moving beyond being just the design tool. They're aiming to be a comprehensive sort of end-to-end platform.
Covering the whole creation process.
Pretty much. The entire product development lifecycle, It's about tackling more stages, reaching new types of users, developers, marketers, not just designers.
Okay.
And they launched 4 completely new products this quarter to back that up.
4 new ones. Okay, let's break those down. What are they and how do they fit this bigger picture?
All right. First, there's Figma Make. Think AI-powered prototyping.
Ah, interesting. So speeding things up.
Yeah, dramatically. Helping teams go from a rough idea to a working interactive prototype much faster, automating some of that detailed work.
Okay, what else? Second, Figma Draw. This one's about richer visual expression. It pushes beyond just structured UI design into more free-form illustration, sketching, visual thinking, like a supercharged digital whiteboard integrated right in.
Expanding the creative toolkit then. Got it. Number 3.
Figma Sites. This lets designers publish their designs directly as live websites.
Oh, wow. So cutting out some of the traditional handoff.
Exactly, streamlining that step massively. Designers can showcase live, functional work almost instantly, less back and forth with developers just to get something basic online.
That sounds potentially huge. And the last one,
Number 4 is Figma Buzz. This is aimed at creating marketing assets.
marketing assets. So like social media graphics, ads, that kind of thing.
Precisely. This moves Figma squarely into the marketing content creation space, making the platform a more complete solution for a company's overall brand presence, not just its products.
So let me get this straight. They want to help you design the app, visualize ideas, prototype it with AI, publish it as a site, and create the marketing materials for it.
That seems to be the ambition, yeah. A seamless journey, idea to launch to promotion, all ideally within their ecosystem.
That's a lot. And AI seems to be a big thread through this, even bridging that gap between designers and developers.
Definitely. They also released something called Figma's Dev Mode MCP server.
MCP, Managed Code Platform.
Right. The key here is managed. It's not just spitting out code snippets. It's a framework that connects the code generated by large language models, AI, directly back to Figma's design systems.
So the code understands the design rules.
Exactly. It brings context from the design system components, variable styles, into the generated code. This should mean faster, more accurate handoffs for developers, less guesswork, fewer errors.
That sounds like a big deal for developer workflows. And acquisitions are playing a part in building this vision too, right? They bought a couple of companies.
Absolutely. 2 key ones closed this quarter, Modify and Payload.
Okay, what do?
Modify brings expertise in motion, animation, and advanced vector tooling. You can see how that directly feeds into enhancing products like Figma Draw and Figma Make. Adds more sophistication.
Makes sense. And Payload.
Payload is a leading headless content management system, a CMS, and also an application framework for developers. This one's really interesting.
Headless CMS. So managing content without dictating the front-end presentation.
Right. Acquiring Payload significantly boosts Figma's capabilities on the development side. It ties into Figma Sites, making them potentially much more powerful, and strengthens that dev mode connection.
So these acquisitions aren't random. They look like very targeted pieces to accelerate that platform strategy.
I think so. It's faster than trying to build every single piece like advanced animation or a full CMS from scratch. They're buying key components to integrate.
And does this signal they're trying to directly compete with existing CMS platforms or animation tools? Or is it more about just making their own ecosystem stronger?
My read is it's primarily about strengthening their ecosystem, making Figma the central hub. By integrating something like Payload, they make Figma Sites way more capable, the design to dev handoff smoother, but they're not necessarily trying to become the next big standalone CMS provider overnight.
Got it. It's about enhancing the core platform's value.
Yeah, making it the place where more of the work happens.
And it seems like users are buying into this expanded vision. You mentioned multi-product adoption numbers looked strong.
Very strong. They reported that over 80% of their customers used 2 or more Figma products during the quarter.
80%.
And 2/3, so about 67%, used 3 or more products.
Wow. That's really high engagement across the suite.
It really is. And it's a crucial metric. It shows these new products aren't just sitting there, people are actually using them together. It validates the whole platform expansion idea.
And it connects back to that high net dollar retention rate we talked about earlier, right? People using more products are likely spending more.
Exactly. It's all interconnected. That multi-product usage is a big driver of that 129% NDR.
So it really does feel like they're building more than just software. It's this whole ecosystem, this community. I mean, they had their big user conference Config this quarter, too.
Right, Config is a huge part of that. It's a major investment for them.
You mean in terms of cost?
Yeah, they noted that sales and marketing spend was up partly because of Config, which slightly impacted the operating margin for the quarter. But strategically, it's vital.
How
Where
so?
they connect with their most engaged users, get feedback, announce big things, build excitement, it really solidifies that community aspect. For a company like Figma, that community feels almost like part of the product itself. It drives adoption, loyalty.
Yeah, that makes sense. Okay, so strong quarter, big product push, engaged community. What are they projecting for the near future? What's the outlook?
They gave guidance. For Q3 2025, they're forecasting revenue between $263 and $265 million.
Which implies
Right.
33% year-over-year growth. Right. Still very healthy.
Yeah, solid growth continues. And for the full fiscal year 2025, they're guiding for $1.021 billion to $1.025 billion in revenue,
Hitting the billion-dollar run rate mark.
and implying around 37% growth for the full year compared to the previous one. They also guided for full-year non-GAAP operating income between $88 and $98 million.
So continued growth and sustained profitability expected.
That's the projection, yes. Shows continued confidence internally.
Okay, those numbers paint a pretty clear picture. But there's this other layer, especially for investors or anyone following the stock closely, these lockup agreements. Can you just quickly explain what those are?
Sure. So after a company goes public, like Figma did, there are usually periods called lockups. These are contractual agreements that stop insiders think employees, executives, early investors from selling their shares immediately.
And why do they do that? To prevent a big sell-off.
Exactly. It's to prevent a sudden flood of shares hitting the market right after an IPO, which could push the price down and create instability. It ensures a more orderly market transition.
Okay. And Figma had something specific happen with an early release condition being met recently.
That's right. There was a condition for an early release of some shares, specifically 25% of eligible shares for certain current employees and service providers, but not the top execs.
And the condition was tied to the stock price?
Yes. The stock needed to close at least 25% above its IPO price for a certain number of days after the Q2 earnings. Figma announced they expect this condition was met.
So what does that mean?
It means those specific shares became eligible for sale starting around September 5th, 2025. It gives some earlier employees a chance to get some liquidity.
Right. So beyond the financials, understanding who can sell shares and when, that's pretty important context. What does this signal strategically?
Well, understanding these lockup releases is critical if you're trying to anticipate potential shifts in the stock supply and demand. An early release like this can create some temporary selling pressure as those employees cash out.
Okay.
But what's arguably more significant here is that Figma also announced a new extended lockup agreement.
Extended, so keeping shares locked up for longer.
Yes. They entered into this new agreement with holders of about 54.1% of Figma's outstanding Class A common stock. That's a huge chunk.
Over half the company's stock.
And this new agreement extends their lockup period all the way out to August 31st, 2026.
Wow. Okay, so that's a strong signal of long-term commitment from major shareholders.
It certainly looks that way, and they've structured the release of those shares very carefully, too. It's not all at once in 2026.
So it's staggered.
Yes, very much so. It's tied to future earnings announcements over the next year or so.
How does that work?
Okay, so roughly,
Yeah.
up to 17.5% of those locked up shares can be sold after the Q3 2025 earnings release. Then up to another 20% after the full year 2025 earnings. Then up to another 27.5% after Q1 2026 earnings.
I see. Piece by piece.
Right. And the remaining portion, about a third of what's in that extended lockup, gets released after the Q2 2026 earnings or on August 31st, 2026, whichever comes first.
So it's a very deliberate, staged release. What's the point of doing it that way?
It's clearly designed to manage the market impact. By releasing shares gradually, tied to performance milestones like earnings reports, they avoid a sudden massive supply hitting the market all at once. It helps maintain stability.
And it also, presumably, keeps those major holders aligned for longer?
You could interpret it that way, yes. It's a sophisticated way to balance providing eventual liquidity for major shareholders while signaling stability and confidence to the broader market.
Okay, that's a lot to digest. Financials, products, community, lockups. hopefully you listening feel a bit more clued into what Figma is up to and where they might be heading.
Yeah, just to quickly recap, Figma's Q2 was really strong, good revenue growth, that impressive swing to profitability.
Right.
And that financial strength is clearly fueling this big push to expand beyond design new AI tools, developer features, marketing assets.
The whole platform play.
Exactly. And users seem to be adopting these new tools, shown by that high multi-product usage and strong retention. It feels like a real transformation from just a design tool to this broader AI-powered platform for making digital stuff.
So here's maybe a final thought to leave you with. As Figma keeps blurring these lines, design, development, even marketing content, what is that signal for the future? Are we heading towards a world where all the creative and building tools kind of merge into one giant super platform? Or will there always be a need for specialized, best-in-class tools for specific jobs?
That's the big question, isn't it? Convergence versus specialization, something to definitely mull over as you watch this space evolve.
Subscribe to my channel Report Stock.